This is Nightly Business Report with Tyler Matheson and Sue Herrera.
New highs. The S&P 500 and NASDAQ close at records as four big blue chips report their quarterly results.
Trade tariffs. The White House slaps barriers on imported solar panels and washing machines aimed at protecting American business. But will they?
Free checking? Not anymore. Bank of America eliminates its popular account as banks look for new ways to increase revenue. Those stories and much more tonight on Nightly Business Report for this Tuesday, January the 23rd. Good evening, everybody. I'm Bill Griffith, and tonight for Tyler Matheson, coming to you once again from the New York Stock Exchange. Hi, Sue.
Good to see you, Bill. I'm Sue Herrera. Welcome, everybody. Earnings season is in full swing. Four Dow components spread across different key sectors of the economy all reported their results today. Johnson & Johnson, Procter & Gamble, Verizon, and Travelers. This quarter is expected to be a strong one. Analysts are forecasting profits to rise by more than 11%, potentially making this the second strongest earnings growth period since 2011. The lofty expectations come at a time when the U.S. economy appears to be firing on all cylinders. Today's reports have one thing in common. All of the companies had something to say about the impact of the new tax law, and these blue chip results could set the tone for things to come. Johnson & Johnson topped earnings and revenue estimates, helped by growth in new cancer drugs and sales from its international operations. But the drug company will take a $13.5 billion charge related to the new U.S. tax law and plans to bring back billions of dollars from overseas immediately. J&J's tax hit is the biggest announced in the pharmaceutical industry so far. Procter & Gamble also took a charge related to tax overhaul, but was able to report better than expected sales and profit. That wasn't what investors focused on, however. The world's largest consumer goods maker posted a drop in gross margins because of higher commodity costs and investments. P&G also fell victim to intensifying competition, which led to price drops in some key units, like its Gillette shaving business. For Verizon, it was a mixed quarter. The company missed Wall Street earnings expectations, but wireless revenue grew for the first time in 2 years. It gained subscribers, and more customers paid for high-speed cellular internet. Verizon took a charge related to the new tax law, but also said the changes would increase cash flow from operations by as much as $4 billion this year. And the CEO made it clear that workers will share in the company's success.
We're giving 50 shares of stock to the non-executives, so 155,000 employees will get 50 shares of Verizon stock. They get to ride the dividend, they get to ride the appreciation of the stock over the next 2 years, so that's a very positive sign to our employees.
And finally, there's Travelers. The wildfires in California, the most destructive in that state's history, hurt the Dow component's bottom line. But those wildfire losses were offset by growth in premiums at the property and casualty insurer. As for the tax bill, Travelers also took a charge. The CEO says that while the overhaul helps create a more level playing field, the company still has a lot of ground to cover to reach its own goals. Of the four Dow companies that reported earnings, just one traded higher. In fact, the two worst performing stocks in the blue chip index today were J&J and Procter & Gamble. Bill?
Meantime, Sue, here on Wall Street, as we mentioned, the S&P and the NASDAQ finished at records today. Netflix helped push both of those indexes higher with a 10% gain of its own after reporting those strong quarterly earnings that we told about last night. Here are the closing numbers for this Tuesday. The Dow actually fell 3 points, closed at 26,210. The NASDAQ added 52, and the S&P was up 6 points. And as the market climbs, the manager of the world's largest hedge fund says it could go even higher. And if you're sitting on cash, he says you could be making a big financial mistake.
We are in this Goldilocks period right now in which we have had a beautiful deleveraging. The inflation isn't a problem. Growth is good. Everything is pretty good, with a big jolt of stimulation coming from the changes in tax laws and such. that is going to, at the part of the cycle, we're at the later part of the cycle. So if you look at the operating rates and you look at the GDP gap and measures, we're going to have a jolt of stimulation into that. And there's a lot of cash on the sidelines. I don't mean just investor cash. I think banks have a lot of cash. Corporations have a lot of cash. So we're going to be, I think, inundated with cash. I think that that's going to produce a lot of stimulation, and I think perhaps a market blow-off. In other words, we're in a situation where if you're holding cash, you're going to feel pretty stupid.
Ray Dalio was being interviewed at the World Economic Forum in Davos, Switzerland. It's an annual meeting of business and political leaders held in the Swiss alpine town of Davos. And that's where Andrew Ross Sorkin is for us tonight.
I'm Andrew Ross Sorkin at the World Economic Forum in Davos, Switzerland, where hundreds of CEOs from around the world and 70 heads of state gather to tackle some of the biggest issues. The economy.
The real thing we benefit by is the general economy, and it's in pretty good shape in the United States, and we project it to grow at 2.7% versus, say, the end this year, low twos.
The state of the global markets.
I look at some of the geopolitical risks rather than the economic risks. Economically, right now, the world's expanding almost every place, and things look good and probably will continue to stay good.
And politics.
If President Trump came here, I suspect this message is going to be one that'll be reasonably well received. Now, you can't expect everybody here to love everything he says, but I think he's going to have a message that will be reasonably well received.
He's going to arrive later this week and give closing remarks at the forum on Friday. No word on what he's going to say, but his America First stance is in sharp contrast with the globalism theme here in Davos.
I want him to bring everybody together in a positive way. I think this is really important. I think it's really important that it's not about isolation, but it's about integration.
For Nightly Business Report in Davos, Switzerland, I'm Andrew Ross Sorkin.
And just ahead of the president's trip there to Davos, that America First stance that Andrew just mentioned was front and center in Washington today when the White House slapped hefty tariffs on solar panels and washing machines. The move was designed to help American manufacturers. Kayla Tausche is in our nation's capital tonight.
In an Oval Office ceremony, President Trump signed an order for steep penalties on washing machine and solar producers outside the United States.
Our companies will not be taken advantage of anymore, and our workers are going to have lots of really great jobs with products that are going to be made in the good old USA, and that's what this is all about.
Effective February 7th, companies like Samsung and LG will pay a 20% levy on the first million machines they import. Above that, 50%. A complaint by Ohio-based Whirlpool in May kicked off a months-long investigation by the International Trade Commission, resulting in these tariffs. Goldman Sachs estimates the price tags shoppers see could rise between 8 and 20%, a point raised by South Korea-based Samsung and LG, who say the move hurts customers and competition. Both are planning to make more appliances in the U.S. Samsung says its South Carolina plant has already hired 600 workers. South Carolina Congressman Mark Sanford praised the Samsung investment and said the tariffs are short-sighted and will cost American jobs, including 7,000 in the solar industry in Sanford State. Solar companies outside the U.S. will pay 30% for parts they import. That fee declines over time in hopes Chinese companies send fewer underpriced products. The catalyst for these tariffs, complaints from SolarWorld and Suniva, which declared bankruptcy in August. But while those companies may benefit, many in the industry will see costs increase.
Most of the industry is really going to struggle with this increased cost. They're going to try to figure out, are there still customers that want to buy solar if it's more expensive? Are they still going to need as many inverters, as many racking systems, as much wiring? And if not, people are going to get laid off.
President Trump spent his first year in office searching for industries where he could implement tariffs he promised on the campaign trail. Today's move could be a precursor for harsher action in year 2. For Nightly Business Report, I'm Kayla Tausche in Washington.
By the way, in response to those tariffs, shares of Whirlpool got a lift today, rising more than 3%.
So, do these new tariffs accomplish what they were set out to do, revive and protect U.S. manufacturers? Joining us to talk about that is Chad Brown. He is a senior fellow at Peterson Institute for International Economics and the co-host of Peterson's Trade Talks podcast. Welcome. Nice to have you here, Chad.
Thanks for having me.
You say that these tariffs are unlikely to accomplish much that is economically positive. Tell me more about that.
Well, I think if we look at the solar panel tariffs, for example, there may be a handful of manufacturing jobs that are sustained by those sorts of tariffs and the protection from imports, but it's going to hurt many more jobs in the solar distribution and installation industries. So these more expensive solar panels are going to mean less demand from consumers, less of these things being put on your roofs, and fewer jobs by all the folks that would do that kind of activity. So it's not clear that this is going to be a positive win for the U.S. economy.
Chad, let me play devil's advocate for a moment. The globalists will tell you that globalization is inevitable. Capital goes where it can get the best return on its money, no matter where it is in the world. But do you think the president has a point when he says that maybe we have been too generous? We haven't done a good job of protecting our own jobs with some of these trade deals that we have signed in the past?
No, I would disagree with that. I think the president is focused very narrowly on a number of industries that the United States isn't really producing effectively in anymore. But at the same time, the United States has experienced considerable growth and expansion in other sectors, in the services area of the economy, in the internet area of the economy, and even in areas of advanced manufacturing that the president really hasn't talked about at all. So I think the president's trade policy is really just singularly focused on the industries of, say, 30 or 40 years ago.
What does it mean for relations between the U.S. and some of its trading partners, such as Asia, among others?
So I think that's the really big unknown to come out of these announcements yesterday. What's going to be the trading partner response? President Trump, with his America First policy, has had, there's been a lot of protectionist rhetoric. Are they going to interpret these as they should be interpreted? These are just kind of normal trade policy actions that any administration might take. Are they going to react normally, or are they going to overreact and want to retaliate? And I think the other big question is this just the first types of these actions that we've seen out of the second year of the Trump administration? Or is this really just a salvo, and we can expect to see a lot more of these types of trade barriers going forward, and that would really be worrisome.
The White House has said other industries are welcome to come to them and make requests for future import tariffs. Who do you think that might be? Who's ripe for making those kinds of requests in your view?
Well, what's interesting right now is the Trump administration faced a number of decisions about whether to impose protection. The ones it made yesterday are the least controversial. Over the next couple of weeks, it's also going to make decisions on whether imports of steel and aluminum should receive protection. There, it's under a different law. They're alleging it's a threat to American national security. They're also looking at whether imports from China's theft of intellectual property, should be subject to trade barriers or other kinds of retaliation as well. So there's a number of very controversial trade policy decisions that the Trump administration has to make over the next couple of weeks as well that are going to be key.
Chad, thank you so much. Chad Brown with Peterson Institute for International Economics. Bill?
Elsewhere, Kimberly-Clark is closing or selling about 10 of its manufacturing facilities around the country. It said today that it's cutting as many as 5,500 jobs worldwide in an effort to cut costs in the face of sluggish sales. The maker of Huggies and Kleenex said that competition is driving down prices for personal care products, and low birth rates are also cutting demand for things like diapers.
It is time to take a look at some of today's upgrades and downgrades. Morgan Stanley downgrading shares of HP to equal weight from overweight, saying that while the PC and printer maker still has the ability to create shareholder value, there are no near-term catalysts for that stock. The firm kept its price target at $25 a share. HP shares were off 4 cents at $23.81. But Morgan Stanley feels a bit better about the other half of the former Hewlett-Packard, Hewlett-Packard Enterprises. Morgan upgrading HPE to overweight from equal weight. The price target was also raised to $19 from $14. Hewlett-Packard Enterprises hit a 52-week high, adding about 4% to $16.67.
And Morgan Stanley wasn't done either. It raised Apple's price target to $205 from $200. While keeping the iPhone maker's rating at overweight, Apple closed the session up 4 cents to $177. And Susquehanna is upgrading Dick's Sporting Goods to positive from neutral. The analyst says that there are signs that same-store sales trends at the sporting goods retailers have improved primarily due to the recent cold weather. Shares of Dick's up about 1% on the day as a result.
Still ahead, while you're looking for free checking accounts, the banks are looking for new ways to make money. A bit earlier in the program, we reported that Verizon is giving its employees shares of restricted stock. Fellow Dow component Disney is also going to give back to its employees with a $1,000 bonus. The company says that 125,000 workers are eligible for the extra cash. Disney will also make an initial investment of $50 million in a new education program designed to cover tuition costs for hourly employees.
And Dow component J.P. Morgan is raising hourly pay for a portion of its workforce as well. The company is also adding jobs and opening 400 new branches in new locations around the country. The bank says that tax breaks and reduced regulations have made the changes possible. J.P. Morgan added that it will increase small business lending by 20% over the next few years.
When it comes to deal making, 2018 is off to a hot start. According to data compiled by Bloomberg, the value of mergers announced worldwide has totaled more than $150 billion just 3 weeks into the new year. That is the highest since the tech deal craze of 2000. Many say that tax cuts, rising stock markets, and strengthening economies are giving executives the confidence to enter into big acquisitions.
Higher ticket prices helped United Continental's results take off, and that's where we begin tonight's Market Focus. Despite reporting a rise in fuel costs, the airline after the bell said that more expensive fares and last-minute ticket purchases did help the company deliver a profit beat. Revenue also topped street expectations. United Continental shares were initially higher in after hours, but then sold off. They ended the regular session up 1% to $77.97. Also after the bell, Texas Instruments said that unexpected expenses stemming from the new tax legislation caused its earnings to slip at the technology maker in the latest quarter. Still, those results, along with revenue, were in line with Wall Street's estimates. Shares at TI initially fell in the extended hours, but did finish the regular day up fractionally to $119.89. And shares of toy makers Mattel and Hasbro saw their shares jump today. No immediate known reason as to why, though. It has been reported in the last several months that Hasbro has approached Mattel about a potential merger. Both companies, though, declined to comment on today's stock moves. Look at this. Mattel shares up 10% to end the day at $17.76, while shares of Hasbro rose by 4% to $94.56.
The railroad operator Norfolk Southern is hiking its quarterly dividend by 18% to 72 cents a share. The annual yield on the stock just under 2%. Shares of Norfolk Southern rose marginally to $151.66. Regional bank Fifth Third said that it would raise the minimum hourly wage and pay out $1,000 bonuses to the majority of employees thanks to that new tax law. The legislation also helped Fifth Third report a rise in profits, which beat expectations. Revenue also improved. Shares of Fifth Third were up 15 cents to $32.92. And the financial services company State Street reported a drop in profit that said it was caused by restructuring costs associated with the company's 5-year plan to digitally connect all of its systems. Revenue picked up gains, and the company said it's well positioned for growth this year. Shares were up nearly 3% to $112.18.
Bank of America is eliminating its free checking account option that does not require account holders to maintain a minimum balance. Now, that news has caused an uproar among some customers who have now launched an online petition, which has already garnered thousands of signatures, urging the bank to drop this new account maintenance requirement. But let's broaden this out and talk about the service fees that many banks are charging customers, even as interest rates rise and presumably improve their profit outlook. Kimberly Palmer is a banking expert at personal finance website NerdWallet. Thanks for joining us tonight.
Thanks for having me.
Banks started introducing these fees about a decade ago when interest rates fell, and there went their profitability. But now rates presumably are going to be rising with the Fed raising rates this year. But we're still getting new fees. Why do you think that is?
Well, banks are, of course, interested in maximizing their profitability. And we are seeing one way for them to do that, of course, is by raising fees. So we've really seen across the board fees going up. And it is a challenge for consumers. On average now, consumers pay over $100 on checking account fees alone. And of course, for some people, they're paying even more than that. And it can really strain people's budgets.
You know, it kind of reminds me of the airlines. It started with, baggage fees. Then it went to, if you want this seat, you have to pay more. And they've been able to get away with that. It seems as though consumers don't have much of a choice. What can they do if they disagree with Bank of America or other banks that are doing this?
Well, this is actually a really great time to shop around for a different bank, because if you feel like you're paying too much in fees, you're not satisfied with the service you're getting, then you do have the power to shop around. It's easier than ever to comparison shop online. Banks are competing in other ways. We're not necessarily seeing fees go down, but they are competing by raising interest rates, other offers, incentives to open new accounts. Especially in online-only banks, you're often seeing no fees or low fees. Credit unions are another great place to look. So this is a really great reminder to consumers to shop around so you feel satisfied with where you're putting your money and you don't feel like you're overpaying in fees.
You know, B of A's chief financial officer said that what they're trying to do is balance the interests of their customers with their shareholders. And I wonder, with the kind of response that some customers have already made, I mentioned that online petition. At last count, it had more than 46,000 signatures online there. Is that the kind of pressure that you think a bank would respond to or not?
Absolutely. We have seen in the past that kind of grassroots pressure work. I mean, it is a lot of power that consumers hold to really raise attention to this issue. So it really can help to raise your voice. Of course, nothing is more powerful than voting with where you put your money. So if you're not satisfied with your bank, put your money elsewhere.
Indeed. Kimberly Palmer from NerdWallet, thanks again for joining us.
Thank you.
And coming up, the $31 billion surprise hidden in the government funding bill.
Here's a look at what to watch for tomorrow. The Dow components General Electric and United Technologies are slated to report their earnings. President Trump and other members of his administration will head to Davos, Switzerland to attend that World Economic Forum annual meeting. And a look at how many existing single-family homes were sold during December. And that is what to watch for tomorrow.
Well, the number of people coming down with the flu continues to climb. According to the Centers for Disease Control and Prevention, transmission is now the most intense it has been since 2009. Now, during that year, a new strain of the flu to which no one had immunity was spreading globally. As we've been reporting, the rise in the flu this season is costing about $9 billion in lost productivity.
Montana has become the first state to set its own rules for the internet. That state is barring telecom companies from receiving state contracts if they interfere with internet traffic. The move is intended to protect so-called net neutrality. Governor Steve Bullock's executive order comes after the FCC rolled back rules that more tightly regulated internet service providers. He has urged other governors to do the same.
Yesterday, we reported on the short-term government funding bill that was passed by Congress and keeps the government up and running for at least a few more weeks. But there was a surprise inside. Ilan Mui has details for us tonight from Washington.
The motion is agreed to.
When Congress voted to end the government shutdown, it also voted to hand a big win to the healthcare industry. Tucked inside the federal spending bill was a special provision rolling back $31 billion in Affordable Care Act taxes. The Cadillac tax on pricey insurance plans will now take effect in 2022 instead of 2020. An annual fee on insurance providers will be suspended for 2019, and an excise tax on medical devices is now lifted until the end of next year. That's a huge relief for John Rennert, CEO of Zoll Medical. His company is best known for making defibrillators at its headquarters just outside of Boston.
There's been broad bipartisan consensus that the medical device tax is poor public policy.
The medical device tax went into effect this month after a 2-year moratorium. Before that, Rennert said, it cost his company $10 million, money that he would have spent making his products work even faster.
Every minute that a patient is in cardiac arrest without being defibrillated, their chances of survival decline by 10 percentage points. So time to therapy, both CPR and a defibrillation shock, is critical.
But the politics around the Affordable Care Act taxes remain perilous. Fiscal hawks in Washington aren't happy that the bill to reopen the federal government also included billions of dollars in tax breaks for businesses.
There are certainly some tax cuts that can grow the economy, but not so much as to pay for themselves. But the ones that were kind of snuck into this continuing resolution really aren't going to do anything significant for economic growth, not even close, but except for possibly damage it, because the higher debt you have, the lower your economic growth is.
All of these taxes will kick back in within just a few years, so businesses like Zoll may have won this round, but both sides know they'll be back at the bargaining table again soon. For a Nightly Business Report, I'm Ilan Mui in Washington.
And late tonight, the Senate approved President Trump's pick to lead the Fed. Jerome Powell will begin his term as chairman next month. And that will do it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening, everybody. We'll see you tomorrow.